Hey everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday, the 7th of December 2018, and we had kind of a bloodbath here this week. S&P lost 4.5%, Russell 2000 close to 6%, semiconductors 7.5%. So just a tough week for equities on the upside, but that should be expected. We are in a downtrend. We're below declining 20 and 50-day and 100-day, 200-day moving average, and it's this volume-weighted average price from the March 17 high that really continues to be where the buyers show up. Now, for how long is anyone's guess, but it's been really amazing to see how many times the market has come down to this level, and then twice this week it found buyers at that level. What's significant about March 2017? I have no clue, but it's clearly been a level to be aware of, that volume weighted average price, that is. Let's take a look at a 2-day chart, meaning each candle represents 2 days. So here's that volume weighted average price for the S&P 500. I also have a 10, 20, 30, and 40-week moving average. You can see we're below all of those. They're also all declining. This is a market that's in a downtrend, and I think it's highly likely that we will see a test of the volume weighted average price from the election before this little bout of selling is over. Maybe even next week. I'm not here to make predictions, but I'm here to observe and see that we're clearly in a market where the path of least resistance is lower. And you might think, well, that's obvious, but it hasn't been obvious to a lot of people. A lot of people have been getting excited on all these rallies, but we know not to trust them when we have a declining 50-day moving average. And it's been a brutal market for both sides of the market, longs and shorts, but we're stuck in this range still. I think that the best case as far as a good tradable short for the market would be a little bit further rally and then break down once again. Let's take a look at a 30-minute time frame, and you can see here on this 30-minute time frame of the S&P 500, I've basically taken that range and I've put a volume weighted average price. I guess it's not on here, but you can see that they all kind of flow together right in what's essentially the midpoint of that range as well. And today we got right up to that level, and in fact, let's take a look at a 15-minute time frame and right up to the volume weighted average price for the week. So this is from Monday. Obviously this week we had 4 days, but the market remains below a declining 5-day moving average, and it found resistance at the VWAP from that gap higher on Monday, and the market again was brutalized here. There's just no other way to put it. We remain in a very difficult environment. It's possible that again, that we can come back up to the top end of this range. I don't think it's likely. I think energy is building, and it's building to the downside, and when you have all these moving averages declining as they are, that tells you that the path of least resistance is in fact lower. For the Nasdaq, again, we lost about close to 5% this week, and this market came right up to where it was supposed to, meaning it came right up to the conjunction of the 50 and the 200-day moving average. Some people get excited about the fact that the 50 is now down through the 200. They call that a death cross, which is a marketing term, but the fact remains we remain in a downtrend. We still have these lower highs and these lower lows. If we take out this low, where could the next level of potential support be? Well, we'll take a look at that 2-day chart, and I think that you again look at the volume weighted average price from the election, and that brings you down to about 157. Below that, we have the volume weighted average price from the prior low, which would bring you down into here. The fact is, we're not looking for the low necessarily. We're looking for a place to say, okay, maybe there's a bounce trade, or it's going to take time. If they don't scare you out of the market, they will typically wear you out as the market turns more sideways neutral. So this has been an important level. I think it will continue to be, so that will be an important level to keep an eye on next week. Maybe we get a bounce from there that's worth trading. If you're a short-term trader, by all means go for it. If you're a longer-term person, then again, as I said on Twitter this week, don't wait for the media to tell you we're in a bear market because it's down some magical 20% number. The fact is, the market is and has been and continues to be in a environment where it's easier for stocks to go lower than it is to rally. We're in a bearish environment. The Russell 2000, it showed a higher low but a lower high still. now back to another lower low, and the path of least resistance continues to be lower. This market found resistance also right at its declining 50-day moving average, as it's supposed to in a downtrend. Semiconductors, it rallied up through that 50-day moving average, but the path of least resistance is determined by the direction of the 50-day moving average. One or two closes above a declining 50-day moving average does not make it bullish. In fact, when we look at the weekly time frame, it continues to be. Look at this week. This is what they call a outside week, meaning that the high was higher than the prior week and the low was lower than the prior week. A big negative, red candle here down to the volume weighted average price from the 2016 low. Next level below that is off of the 2015 low. The volume weighted average price there brings us in at about 85, which certainly seems reasonable based on the energy being built in this market. You could start to say that it's building a triangle in here even. The biotechs right back down to the bottom of that range that or into that range that they've been in, the top end of that range, I'm sorry. But this market also came up right to the 200-day moving average in the year-to-date VWAP, and with a declining 50-day moving average, it was not a surprise that it continued to move lower. Next week, maybe we see a little bit of a bounce in here, perhaps up towards 105.5, and then it is able to continue lower. There's still a lot of danger in this market. Don't be complacent. The financials, this market got up close to the 200-day moving average and then just completely fell apart. It, of course, also has a declining 50-day moving average. So it's my belief that when the 50-day moving average is declining, that it's not a good idea to buy, and that it shouldn't be a surprise that when you get losses, buying just because it's above the 50-day moving average is an amateurish way of looking at the market. Consider the direction of the 50-day moving average, the direction of the 200-day moving average. The direction of the year-to-date VWAP tells us that, on average, the average long participant in the market this year continues to lose money at an accelerated rate with that declining volume-weighted average price. And here we see that we've closed once again below the volume-weighted average price from the election and the volume-weighted average price from the 2016 mid-2016 low. We closed right on. Next level where we would look for maybe the market to start to stabilize would be down at about $24.20. How would it get there? Well, I don't think you would necessarily want to sell it right here, right now. And this is, in fact, what I'd drawn in for subscribers I thought might happen today. But these markets are in a lot of trouble, and trying to fight them is a losing battle. You might think it's down too much or that it's a value or something like that, but money is flowing out of these markets. Why on earth would you try to stand in front of it and think that you're smarter than the markets? The energy names continued lower here. This group, perhaps comes down to where we've seen some important support here near 61.5. What would be the better scenario would be for a quick break below that level and then perhaps a bounce. Think about the psychology of the people who have shorts underneath here. Why on earth are they waiting so long to get out of this market? If they get out, think about the education level of those participants and think that, who's left to sell after they do. Or think about the people who are thinking, well, if it gets below that level, I'm shorting. Well, why weren't you shorting already when it's already experienced this big decline? And we see that year to date, we're now down 10% in this group. So difficult tape. Apple's not finding support. Here's the volume weighted average price from the election. Maybe that's a level for it to find some buyers and some stabilization next week. Or perhaps it continues down to the volume weighted average price from the 2016 low. There's no such thing as down too much when there's still sellers out there waiting in the wings and selling each time it rallies.